Hey guys, hope you are doing well. We are the Finance Club of JBIMS batch of 2022 and we arrive again with another podcast. This week we will cover the brewing topic of P2P lending business in India, also called peer-to-peer lending. Recently, a popular FinTech startup, Cred, which you must have heard of, entered into P2P lending and has partnered with LiquiLoans. So we'll see what is P2P lending, its benefit to companies and users, and how Cred's business model is built around it.
Traditionally, whenever people needed money, they used to go to the financial institutions like banks and NBFCs. The financial institutions then collected money from the customers who make deposits in current account, saving account, fixed deposit, and term deposits. This money which lenders have is a liability in the lender's balance sheet. This deposit is given to the customers or corporates who need loan for different reasons, which will be an asset in the lender's balance sheet. In this approach, there is a financial institution like a bank or an NBFC in the middle of depositors and borrowers. So this is how traditional lending works in India. Now coming to P2P lending, this approach enables individuals to obtain loans directly from other individuals, cutting out the financial institution as the middleman. P2P lending is also known as social lending or crowd lending. It is a nascent type of lending in India, but in developed countries it has been existing since 2005. P2P lending offers both secured and unsecured loans. However, most of the loans in P2P lending are unsecured personal loans. Secured loans are rare for the industry and are usually backed by luxury goods.
Now let's dive into how does P2P lending actually works. Peer-to-peer lending is a fairly straightforward process. All the transactions are carried out through a specialized online platform. The steps I'm about to talk about describe the general P2P lending process. Initially, a potential borrower interested in obtaining a loan completes an online application on the P2P lending platform. The platform assesses the application and determines the risk and credit rating of the applicant. Then the applicant is assigned with the appropriate interest rates. When the application is approved, the applicant receives the available options from the investors based on his credit rating and assigned interest rates. The applicant can evaluate the suggested options and choose any one of them. The applicant is responsible for paying periodic, usually monthly, interest payments and repaying the principal amount at maturity. The company that maintains the online platform charges a fees for both borrowers and investors for the provided service.
On a similar model, many companies in India have started this business. LiquiLoans, Lending Club, and Rupee Circle are some of the licensed P2P lending non-banks in India. Recently, Cred, which is a well-known fintech startup, announced its entry into peer-to-peer lending business called as Cred Mint. So let's analyze how things will work in Cred's P2P lending world. Cred is essentially a credit card repayment company and it gives rewards to its members for paying the bills. However, Cred is open to only those individuals who have a credit score of more than 750, making it a community of extremely creditworthy people. Now, Cred realized that its users have lakhs of savings in their bank accounts lying idle, which earn interest that is not even able to beat inflation. So Cred launched this P2P lending idea where the savings of individuals who wish to earn higher interest rate will be pooled together and then be used to lend to other people who wish to borrow money. Due to high credit worthiness of Cred users, the risk of defaults will be much lower according to the company. Those Cred users who will invest in this product will earn around 9% interest rate while the loans will be disbursed at around 12% to 13%. So the lenders will earn a better interest rate than saving accounts and FDs, and the borrowers will get loans at lesser interest rate than banks. Also, this keeps a sufficient net interest margin for credit, making this a win-win product for everyone involved. However, P2P lending is a very highly risky business for any company. Cred has reduced that risk to some extent by allowing only high trust individuals to use its platform. But still, the risk of defaults and NPAs will be there, at least to some extent, and it will be interesting to see how Cred manages that.
So in conclusion, P2P lending is in the nascent stage in India and new companies are coming up in this arena. In future, borrowers with low credit ratings might get access to easy loans and for investors who are lending it will have to bear some high risk. This high risk will definitely get compensated with higher returns, which is more than the deposit returns that investors get after depositing money in banks or NBFCs. So this is all from our side for this week. We'll be coming up with such intriguing concepts in the future as well. So don't forget to subscribe our podcast on Spotify and YouTube. Let nothing come in your way towards financial enlightenment. This is the Finance Club of JBMS batch of 2022 signing off.